Okay, so personally, I feel like this might be one of the easier portions to study. Is going to be her chapter 7, part 1 with the cash, mostly because it deals with things like bank reconciliations. And I will say, personally, I think those are a little easier to do than most accounting things. You just got to remember on these, for sure, always write that stuff down, because when you can look at it, it is so much easier to figure out where things go when you do that. So, has anyone had any concerns for how you would get any of these different, I guess you would say, terms confused in any way? I know cash is pretty easy to understand and what cash is, but maybe on the restricted accounts. Let me pull my little handy dandy intermediate
Can you do
account.
an example of a restricted account?
Yeah. So like uh, restrictions are normally come from some type of intent or are contractually imposed. So that would involve things like um, specific purpose funding or like bond sinking. Let's see, another good example would be like when a lender requires compensating balance on part of a loan. So I'm in banking, so I see this fairly often. People will come in and they will deposit money into a CD and they will use that CD as collateral. So that's another way to kind of think about it, is think about it as almost being stuck, can't be touched, is used for something kind of specific.
So it's kind of like when she was talking about, like when on your retained earnings, whenever they have a certain amount of money for like something else besides bonds.
Yes, I would definitely say that seems the most reasonable when it comes to that. Um, Normally, again, that's like restrictions can be informal, arising from management intent, or contractually imposed in some way, shape, or form. But yes, that is exactly what it would be like. Hee specific. I should probably change the colors so it's a little bit better and people can maybe see it a little bit. No, no, let's do dark green. That works. Okay, compensating balance. Minimum cash balance which must be maintained to support or a present or future borrowing. Um, the best way to think of this is lines of credits. It's some form of money that is there to cover something that could be happening. Personally, I also think of it, she doesn't actually mention it like this, but I also kind of think of it as like a savings account almost, too. Sometimes people, when they set up their accounts, they have a savings account and they set it up to where if something's happening and whatnot, that they pull from that savings. But the difference between, I feel kind of dumb for saying this because I feel like everybody knows this already, difference between a line of credit and savings. Technically, you have to pay back a line of credit, whereas you don't necessarily have to with the savings. But line of credit is going to be the best way to think of it. Okay, bank overdrafts. Current. Have to be current. Correct. Now, when it says proper and improper offsets, she pretty much just wants to know what happens when it comes to the bank overdraft. So what happens with deposits in the same bank, and then what happens in different banks. Well, it does not offset if net amount is positive, and then it doesn't offset at all if it's a completely different bank, which that should make sense, because if you're getting an overdraft in a bank, it should be the overdraft in the bank you're currently in, not at a different bank. So that's the only way I really think about it. Won't stay in my color. Okay, cash equivalencies. Short-term, high liquidity investments, readily converted into known amount of cash, so near maturity that there is insignificant risk to change in value due to changes in interest rates. Okay, investments 90 days or less. Treasury bills, commercial papers, money market funds, CDs. This is the best way to think of this one. They're things that, you know, they're pretty much made to make you keep them. They want you to keep that money. Normally it has to do with, what's the word I'm thinking of right now? It has to do with trying to keep that out there before it actually gets used. But when you're thinking of cash equivalencies, again, just try to think about like bonds, which are the treasury bills, money market funds, CDs. Try to think about that the way they are. They invest within a specific time, and it's normally something you are trying to keep and not touch for just a little while. Alright, so the control over cash. Objectives of internal control. This one's fairly straightforward. Safeguards assets, accuracy of accounting records, compliance with laws. Personally, I don't really have an easy way to think of this, so it might just be best to kind of remember what these items are. And then the example, segregations of duties. Don't allow the same person to handle the assets and record them in the accounting records, or you use an impressed account and an account with a constant and non-fluctuating balance, and bank reconciliation. Another example of a way to think of controls, again, this is me with being in banking, we do a lot of dual control. And with dual control, it's where there's somebody there, but there's another person almost there, like an audit. So again, just think of it as a way to keep an eye on what's going on with the money, pretty much, and it's a gigantic safeguard.
So it's like checks and balances.
Pretty much. That is pretty much what the objective of internal control is. And it's, yeah, it is 100% checks and balances. Now, bank reconciliation is the best way I think of this goal of identifying the differences between the bank balance and the book balance to determine the true balance. Bank reconciliations, this is definitely the best way when you're thinking of what that goal is, because it's like having a checkbook and you're writing down everything you do at the bank. You make a deposit, write that deposit down. You got a check you wrote out to somebody, you write that down. That way you have something written and you can use that and check it against what you have at the bank. So it's pretty much the bank side, book side, just like what this says with the preparing of bank reconciliation. Did anybody have any questions regarding any of the other stuff we talked about before we move on to reconciliation?
Does she have us do? Does she have us do any bank reconciliation, any of this kind of stuff on the test?
Yes.
Oh, okay. I wish I didn't ask that.
Yeah, you'll definitely see this in the test, and if I'm not mistaken, this will also be in the optional exam as well. But bank reconciliation is going to be the easier thing that we're going to do. I promise you.
So it's not, sorry, where I work, we hit a button and it does it.
Mm-hmm.
Except for like any errors.
Yeah. No, this is going to be pretty much
Old school.
Yeah, it's all old school. It's going to be they're going to give you these amounts on both sides. It's going to tell you this many things came through deposit that the bank is showing. This right here, this check was written but hasn't been cashed yet, kind of stuff. And you have to take that information, and you're going to pretty much what you're going to do from there is you're going to make adjusting entries to either the bank side or the book side, and it's going to be adjusting journal entries that are going to be able to help reconcile those amounts and make them the two balance. It seems a little intimidating, but I promise you it'll get easier. I promise you. No.
Ma'am, you're gonna have to buy me a drink before you keep making these promises.
As once you get the general basis down for it, I promise it gets easier. But if I need to buy you a drink, then so be it. We can hit somewhere up, have a drink, and study.
Hey, Leslie, come to
Yeah.
Lubbock.
I graduated from tech, so I would happily come there.
Ooh, guys, Kimmy's.
That sounds great. With the bank, I guess with all journal entries, but like especially this one, what helps me is trying to think of a list of the accounts that are typically used in a bank reconciliation, because when you go through, like she explained, there are some that the bank doesn't know about, and then there's some that we don't know about. So once you can get those straight and figure out what side, like the accounts receivable error that she has on the Bucky Buffalo example, I just like to think about what accounts can be used, because that helps me, I guess, think about how to write the journal entries.
Yes. 100%. And when I do bank reconciliations, I can't even word today, but I like to do it kind of the way she has it set up here. I have two different sides. I'll do the bank side, and then I'll put a C side, which normally I do as like the company side. That way I don't get B's mixed up. And then
Okay, say that again, please.
Oh, yeah. So I will set something up here, let me I'll do like a little kind of thing here. So pretty much what I will do, I'll just go down to the bottom and do it that way. So pretty much what I will do is I will make something on one side that'll be like B, and then I will have that part on that side, underline that, and then on the other side have another one, and then I put C. It's B and C, and then I kind of think of it as like a T chart, and on one side the bank stuff goes, and on the other side the company stuff goes. That way I kind of have a running idea of what's going on each side to be able to make it balance. I wish I had my actual writing stuff on here. I could actually show that to you. But yeah, so kind of think of it like this. She has all this extra stuff right here. Don't think of all this she has in the middle. Just think of that as blank, and that you're just putting something on each side. So like looking at this, I will use that Bucky's Buffalo Company information. So it gives you the following instructions at the bottom, and it says the book balance, the GL, for cash in December. So for that, I would be on this side of whatever she has. I don't know why she has it set up like this personally, but I would put it on this side, and I would add balance per book, and then I would have whatever that amount is. So I'm not sure if this is the exact same one. I might have accidentally pulled one of my old versions of this, but I have 9,247. And you pretty much do that with every item that's listed.
So then, like the bank balance, just like on a T account, you would just put it on the B side.
Yes. Yes. And then for things that are going to be considered negative, like outstanding checks. Outstanding checks, I always put in parentheses. I write them out in parentheses. That way I know that specifically is going to be a subtraction. So I don't accidentally add them, because I do that all the time. So when I have the parentheses there, it makes me remember, oh, okay, I'm not adding this one I'm for sure subtracting. Well, let me see if I can. Oh, you know what? I'm going to do something different down here for that. This will make things hopefully a little bit easier. We're going to insert a table, a 2 by 2. We'll do this right here. Make that show up just a little bit so y'all can see it. I'll minus out. That might help a little. There we go. Okay, so here got my bank, and then this one right here, this is my company book. So these are both the books. That way we can set this up. So first one, the book balance, GL for cash at December, was the 9,247. I cannot talk today. I apologize. So this is going to be balance. Control V. There we go. Do those a different color, that way you don't have to worry about mixing that up. Okay, and then the next one, the bank balance.
7729.
Balance is the 7729. And then moving on to the next one. The bank collected a note on behalf of Bucky's consisting of the $1,000 principal, $40 interest, a total of $140. Let me see where we add that one to. This one's going to go onto the company side because the bank collected it, and since the bank collected it, that means we're going to consider that this is part of a bank balance, but not our balance in the bank. So, note plus interest. It's going to be the 1040. Then we've got our bank service charge for the month. Service charge, that's going to be on this side right here. Think about this one. This one's going to be a negative. Then checks previously deposited by Bucky's was returned for insufficient funds. So this right here, this is just going to be considered an NSF. And that's the best way to think of it. When it's returned, it's an NSF, so it automatically means it's going to be subtracted. And then checks that have written but have not cleared, that goes on the bank side because, again, the bank is not accounting for them being a part of it. So outstanding checks.
Sorry, that NSF is going to go on the company side?
Yes, because we're an NSF is going to already be charged by the bank, and so our company book isn't going to have that NSF charge yet.
That's how we're supposed to be thinking about it. Sorry, I just had a light bulb moment.
No, you are 100% okay. Like I've said, I deal with this on a daily basis at a bank stuff, so it's a little easier for me on that point, but that is the best way to think of it. Making this a little bit bigger, that way we have see it better. Why it's over here? Hold on. It doesn't have that. Yeah, we're just not gonna worry about that at the moment. Okay, so we got our outstanding checks. The bank isn't going to have that yet. Then we've got outstanding checks. Next one is a deposit made after banking hours on December 31st, totaling the $4,110. So this is what's going to be called a deposit in transit. I can't spell today either.
We do a DIT at work.
Nice.
Sorry, I didn't know if that was helpful.
No, that's actually a better way to think of it, and that's much shorter. Yeah, I'm gonna do it this way. Like it like that. Did.
Yeah, we do DIT, and then whatever is DIT, because I work for an accountant and she's trying to help teach me.
Yeah.
She will go through and like highlight it in red and explain it to me. And
so I don't know if she does. You know what? I'm not gonna confuse you, so I'm not gonna put that thought I had in my head out there. But,
I'm easily confused. Please don't.
Yeah, you're good. I'm not gonna do that. So what we're gonna think of is the company side already has this, and so we're counting this on the company's books already. The bank doesn't. Since it was deposited after hours, it's not on that banking day. So because of that fact, we're not going to see it in our online banking or anything like that. So that's why we're going to count it on the banking side as a credit rather than a debit. Then we've got, after that, check correctly recorded in the general ledger by Bucky as $40 payment was incorrectly processed by the bank as $40. All right. or 400. This is where stuff gets a little trickier. And when that happens, when it starts having things like this, I will actually go up here and attempt to write these out next to the question or separately from my reconciliation I have at the bottom. So the best way to think of this is there's a difference between these two. So 400 is what the bank suggested or thought we put, but it was actually 40. And because of that, we need to think of this as $360 difference. Now, this $360 difference is going to be considered a bank error. And since it's a bank error, it's going to go on the bank side. Bank error. If I'm not mistaken,
It would be in parentheses.
no, because this is payment. Since we were paying them $40. The bank thought we were paying them $400. So we're actually getting a credit here. So it's not going to be a negative, shockingly enough, and in parentheses. So that's where I was saying, like, she's very particular sometimes with how she does her questions. And because of that fact, you have to like look at that specific writing and make sure that what we're doing is a payment rather than us getting paid. Because of that fact, if it was us actually getting paid, it would be a negative on the bank side. But since it's actually the bank gave out more money, that's why it's going to be the positive rather than the negative on that side. So I was saying, sometimes it's just those little bitty like transitions in words that can cause a slip up sometimes. It's very unfortunate and I hate it. So, not that anybody cares that I hate it, but I do.
I care.
Well, thank you for caring. So on this next one, $1,000 deposit from a credit customer was recorded as a $100 debit to cash and credited to accounts receivable by Bucky. So for sure, this is going to be not a bank error. This is going to be a company error. So pretty much just like what we did before, we're going to put the amount that what it actually was and then subtract the amount that was written down, or the error, which is going to be that 100. That's going to be 900. This is, let's see, under. This is an under record kind of thing. And because of that fact, because we only did the $100 credit, that's why it's going to be considered a positive, is because we actually need $900 more dollars. Because it was originally $1,000 we should have got, but we only credited it as $100. So we're missing $900 here. So this is an accounts receivable error. And that's where we're going to have the 900 and it's going to be positive. So, after we have this together, pretty much what you're going to do is you're going to pull out your handy dandy calculator, or if you're good at math, you can math this in your brain. I only math in my brain when I'm feeling a little frisky, and I'm not feeling frisky today. So, we're going to do this total real quick. And unfortunate, I'm not having this in Excel, because Excel this would be so much faster. So that minus 1,500 plus 4110 plus 60. Okay, so this first balance should be, haha, if I had a thing here, 11,149. Now, whatever we have on one side when we first do it, we want that to be what we have on the other side. So check the amounts over on the other side. So 9247 and 040. Okay, and so on this side, after you tally up everything that's above, you get the exact same amount. And this is what you're looking for when you're putting this all together. She's wanting to see that both of these are going to equal each other. And that's what you want, because this right here is pretty much what we were talking about earlier, the internal control. These two balance each other out. So we know specifically that this is safe. We've set everything up. It's good to go. And this is our full bank reconciliation.
And what she said in the video for this was the two that she had to do the math on. So the 400 minus 40 for the bank error, and then the 1,000 minus 100 for the accounts receivable error. 360 and 900 are all divisible by 9, and all of the digits of each number add up to 9. So she mentioned if you're going through and you're off by something that's divisible by 9, to check there first.
But that's just going to be for this specific question. That won't be for everything.
She made it seem like it was all the time. Is it not?
So if that's actually an old school, like old bookkeeping rule, because my mother-in-law taught me the same thing when I was having trouble with like accounting 2 or something like that. She's like, "Oh, you transcribe 2 numbers, you're fine."
Huh.
Okay.
That's really fucking weird, but that's math for you.
Yeah.
Well, no, I think it's one of those rules that was made like before they had the TI-84s and all that stuff.
That would make sense.
Yeah.
I have a TI. I love my graphing calculator. That thing is a godsend.
Mine's pink, just in case y'all were curious.
Mine is
I have a
as
pink
well,
one too.
So we're all in the pink club, and this is wonderful.
Yeah.
Okay, so this is your reconciliation. This is what she wants to see when you're doing your bank. Not necessarily in this table I made, but something like this is going to be the best that you're going to do. You can do this T-chart. A T-chart is just as easy as one of these. But this is what you're going to get when you do your the bank reconciliation, the original part. Now, the entries necessary to make the GL correct and complete, you need to think of this as not just the GL for the company, but also the GL for the bank. So, you got to think about, well, I take that back. Let me take that back real quick. No, this is all the one, but you are going to consider things that have happened at the bank in the GL. So when you're doing the general ledgers, sorry, I don't know why I got that confused for a second, but I did. You need to think of the things that you're going to add to show that this stuff right here has come through into the company side. That way you can set it up. So like most setups, we'd probably start first with the amount of money you're receiving. So you're going to want to get your credits and your debits. So first, let's start with thinking about the credit. So the first thing we're going to think about is everything we're going to get. So this note plus interest, that's one thing we're going to get. And then this right here, the accounts receivable, another thing you're going to think about. So we're thinking of that as pretty much cash. That is cash coming in, and we have that. So those totals, the two together, which we should already know those, but 1,940 is the total we're having there. Then, oh, that is way too far. We're going to move on to the different offsetting amounts that we're going to get to have this 940 cash. First, you're going to do your notes receivable. I do notes receive. And then the notes receivable, we're not going to add the interest. Not going to add this interest yet, because you got to think about this as like we're doing a pretty much think of it as like you're doing the journal entries for a statement that you're going to prepare later on. So your notes receivable, you've got your 1,000, and then since we have $40 interest, that's where you're going to have your interest receivable. So that's why we didn't add the 40 originally to the notes receivable, because we're talking about interest receivable. And so the interest receivable will go here. Well, I mean, as well as I try to set this up on Word. And then just your last one, it's going to be your accounts receivable. That is the 900. Boop, 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 boop. So this would be your first entry. This right here, this is your first journal entry that's going to cause all the credits to the account. You're going to get this wonderful cash, and this is how you receive that wonderful cash. Does that make sense?
Yeah.
Cool. Perfect. Well, after you have that one, we gotta have another one. Well, maybe if it's just being a little extra right now. I don't know why it's being so damn extra. Anyways. Now we need to think about everything that we don't have. Everything that has been taken out. And the way to think about that is that first, we've got that service charge. So that's going to be a bank expense. The bank expense, that's $20 coming out, right? Well, then, after that, we got that NSF charge. Well, since that's a returned check, that's going to actually be considered accounts receivable, because accounts receivable was receiving that money, and that money got returned. So that's where we're going to put this one. 18. And then the only way you have to fix this up is you got to do the next portion that just adds those two items up. Cash is 38. And personally, I think the best way to think about this is you're going to have a cash debit and you're going to have a cash credit. And this is how you're going to do those adjustments to make your company balance match what the bank balance is going to be. And this is our pretty much tracking of how we did that. All right. We good there? Cute. Assuming so. Now, I did pull the video if we needed to go over anything, but I feel like we kind of don't. think under this one, this one a little different. Let me pull this real quick. Okay, yeah, this other one she has, this sample exercise, is pretty much the exact same thing. It's another cash reconciliation where she has all the things written out, and you're gonna take them and create your balance sheet. Do we want to go over that one, or do y'all want to try and do it on your own later and then us come back to this on Sunday when we do a refresher? Well, check up on next week's work, but
I've had a day from hell, and so my brain is shot. No more cells are living.
That's okay. And I understand 100%. What I would say is work on this and kind of see how you do with it on your own. And then let's catch back up at a different time and we can kind of go over it. I mean, even if you just want to kind of like do an Insta message, if that makes you feel better, we can do that and kind of see where you feel strengths are when you're putting these together, and any strengths you might not have. Because again, like I said, I feel like part one is the easiest. It's just having those two separate accounts. You got to think about your bank account and you got to think about your actual book account. So I mean, if you want to take it in a personal level, think of it as your online banking statements and whatnot. And then the other one is going to be your little check ledger, and you're checking your check ledger and your online banking, and seeing if they match up. And that's pretty much what we're doing, is putting these two together.
So I'm about to feel like real stupid for asking this. Please don't make fun of me. It's been a day.
There's no such thing as stupid questions, so you're good.
Don't tempt me with a good time. I'm sorry, guys. I'm out of it. Ow. Is this gonna be one of those things where the more you do it, the easier it gets?
Yes.
Like math?
Yes. I would 100% say yes, mostly just because I have been doing this. I didn't even know this was accounting originally, this bank reconciliation. I was doing this kind of stuff before I even started taking accounting. So this is second nature to me personally. So once you kind of just get into the swing of it, it gets so much easier. If you find yourself actually having like issues with it and you're kind of feeling a little stuck, use it in your everyday life. Get like a little check registry or something like that, and start there at a specific amount that you have in your bank account at that moment. Write that at the top of your check registry, and then as you're going, say you Venmo somebody, just write down on that registry, Venmo'd so and so, put that debit down, and you keep doing that. And then at the next, I would say either at the end of the day or the next day, take that register and go get on your online banking and check each one and see how they match. And then if they don't, you would be able to see, well, okay, these aren't matching up. What am I missing? And then you'll be able to tell from your bank side, oh, okay, I had another debit. I went to Stripes and picked up a Coke. So I didn't write that one down in my registry. And then you would have that down on your little registry there on the side. And then that will get easier doing it that way, to be able to get the actual writing down of the bank reconciliation. Now the GLs, I would say, are a little different, but we can always practice with that. we can definitely practice with the GLs if you're feeling uncomfortable with them.
Thank you for explaining it like that, because I would have never connected the two, and I work off of, like, my brain works off of examples.
Yeah, I mean, I'm the same, and that's how I have to come across certain items, especially in accounting, is I have to consider and think exactly how this is. Prime example, I was having some issues where my brain was not clicking about a receipt in financial accounting. And for some reason, I was like, okay, well, how much exactly is going to be here to have this receipt? Because, like, how much is this person getting paid? It's like, is it this person actually paying this exact amount, or are they paying a completely different amount? Well, I had a friend who I asked him, like, hey, can you look at this question and help me out a little bit? Because I don't understand exactly what's going on. And I was like, please explain gross receipt to me as a specific way that will specifically make me think about it. And he was like, all right, think of it as like your actual receipt that you get. He's like, when you get your receipt, that receipt's not depreciating because you have it right then and there, and that's the amount you spent. It was, he's like, think about that receipt. That's exactly how much you spent right then and there for that value of the appliance. The appliance was sold for how much? This much money. All right, that's your gross receipt, because that's not depreciation. We're not worrying about that. We're not worrying about the credit amounts and the cost of the client or anything like that, because how much was it when you bought it? That's what your gross receipt is. Sorry, that might have been a little bit of a rant, but I don't know why I was stuck on that in federal accounting last week, but I was stuck on that and I could not brain it. And that was how my friend was explaining it to me, and I was like, okay, that makes a little bit more sense because it was bought right then and there. There's no way it's depreciating because of the fact that it was bought right then and there, and it's going to be that exact amount. So, definitely when it comes to accounting, you have to have those things that trigger back and forth, because if you don't, sometimes stuff gets real confusing and really backwards. And yeah, it gets hard sometimes. All right, so does anybody have any other questions, concerns? I haven't started on my balance sheet quite yet, but if you have any questions about that, I might be able to be helpful, because I do have my information for it right here.
Thank you for doing this.
Yeah, no
Yes,
worries.
thank you.
This is helping me out too, because it's making me think a little bit more on it. So, no worries.
I also have not started my balance sheet, so I don't have any questions at the moment, but I'm sure I will come up with some.
No worries. I'm planning to have at least started this and maybe have like a balance sheet Sunday evening kind of like little thing if anybody needs questions or concerns on this balance sheet she's got for us. So does this
That sounds
time
good.
kind of work out for y'all? Want to
Yes.
try again on Sunday?
Yeah, I may be here like physically, but the Cowboys are playing, so I will have that on. But I definitely, after getting some balance sheet work done, I definitely will want to talk that over. So yes.
I'm down. And I will be forced to watch the Cowboys.
All right, understandable. Then I'm going to go ahead and stop this recording, and we can meet back up on Sunday.